All right, good morning, OBI. It's Monday, December 19th. I just wanted to run over a couple things for this week real quick. Before we get started, I did want to let you all know that I am making some changes to the Discord. You may see some channels changing, some being added, some being deleted, so don't be alarmed. I am making some changes. They should be done by the end of the week. All right, so looking at SPY here, we zoom in from yesterday, from last week's action, we could see we had a lot of downside action, of course, following CPI and FOMC. Uh, like I was mentioning on the last video, we did break down under this 395, 390 level. And once we broke that 390, like I was saying, 385 came pretty quickly as we gapped down overnight. And the market does like to do that sometimes where they know they'd have to pay a lot of money out if certain things happen, throughout the day because of so many day traders. So sometimes they move the market overnight where they know they don't have as much liquidity and things can go a lot smoother for them. But that's another story. But as you can see, yeah, we broke down under 390, got to 385, continued to the downside, and almost got pretty much to this 380 supply area where I do expect the bounce to happen, and we did get that bounce. I did mention on Friday that I wasn't comfortable getting the short-term puts here, and if anything, this was a good place to exit because you will see some buyers try to step up and take this thing back up. Now, does this last? We don't know. It's a buyers and sellers game. So, and we just have to be the little fish in the water that's kind of just waiting for the move to happen. We can't try to dictate what's going to happen. Just allow the market to tell us. So, here we're still above this 380 level, and we're getting a bounce overnight into the morning here. Now, a good short that I'm looking forward to if it does come is if we do look to open and fill this gap. Now, that's one possibility. If we did go to fill this gap, I would look for a rejection back at this 389 level um, for some put. That would be an ideal scenario where we could enter some puts and get some more time as well. Because I know some of y'all were asking about where would be a good place to get some more puts at. So if we could get that gap fill and rejection, that would be one spot. Now, if we don't fill that gap, that's going to tell me that there's more weakness in the market and that we'll most likely come back down to retest the 380 level. If that happens, of course, we could break through or we could hold again, but that could be either a position for calls on the bounce or puts on the break. Um, I would rather try to short if we get this gap. If we don't fill this gap, I'd rather try to short up here than try to short 380, just personally. Um, but we'll see what the market does at open. We did have some news coming out with Tesla, and I see it's getting a little movement in the pre-market off of Elon's poll about um, stepping down from Twitter. So that is putting some buying pressure on Tesla right now, just because of the fact that if Elon was to do that and step down, investors would feel as if, okay, well, Elon's focused more on Tesla again, and people would feel comfortable buying the stock. Because as right now, people are just losing trust in Elon. His antics are just getting a little too out of hand, and it's playing with a lot of people's money, and people aren't happy right now. So that's something to watch for. As we did open a starter position on some Tesla calls, um, those are looking decent right now. I mean, I'm only holding one, and I probably most likely will hold that for a while. I'll show you why. I took that try at a position. I talk about risk reward a lot, and it's not to say that I know this position will work, but um, there's a lot of time and where we're at on the Tesla chart that I'll show you in a little bit. You'll understand why that was a good spot to actually take a try at it. And if it doesn't work, we can always cut and move on. But yeah, this is what's going on with SPY right now. Um, we're going to continue. I think in this downtrend, I don't see us having a Christmas rally and going back up to highs here. I just don't see that happening. I would look for any type of movement up as an opportunity to look for longer term puts. I've discussed about, looking for March and May puts for specific sectors, specific stocks that we've been talking about. And I'll continue to bring up some more as I see some opportunities. But I think we're going to likely start trending back downwards. I think we've been in this range for a minute now, and with the Fed coming out and Jay Powell coming out very hawkish, and the market understanding, that they're not going to ease up, it's probably time that we start revisiting these lows. I don't think they're going to come overnight, but slowly but surely we're going to start trickling down there. That's why you want to buy time on these puts so that you don't have to, worry too much about theta and theta importantly cutting into your contract's premium and you're not getting the move you want in time. Nothing wrong with buying a little time as insurance so that you get more bang for your buck. A lot of times we try to buy these short-term positions and they do work from time to time if we can time them correctly. But if you want to size into something, you want to size into some longer term puts or something with time just so you have that insurance and you don't have to see that data decay your money. So that's pretty much what I'll be looking for on SPY. Today is Monday, so we don't have to rush into a place today. We can allow the market to do what it does, and then we just, take the opportunities that are given when they do come. So that's SPY. And let's go to. I'm going to stop this share screen for this one. I'm going to show you something else. One sec. All right, so this is my Webull desktop, and the other one was TradingView. That's just where I like to show you guys SPY, and I like to look at the S&P futures on there as well. It's just a cleaner look. But here on Webull, if I go to Tesla and we're at this 150 level, and we were in Tesla puts on Friday, took about 20%, nothing big, but something good. Nothing wrong with taking 20%, compounding, all right? So we took 20% on Tesla puts on Friday, and I exited when we touched 150. Reason why I exited is because if you go and zoom out, and I always tell you guys, get off those smaller time frames sometimes and look at the larger time frames, the daily, the weekly, the monthly, just to see where you are, on the bigger picture of things. So if I go to this weekly here, you'll see that we're right here around this 200 MA on the weekly. Now, if I also zoom in here and I look at support levels or prior resistance levels, here we are. This prior resistance for this was for Tesla back in 2020. Right here, you can see that multiple times it tried to break this level and could not. Then finally it broke through, right? And I talk about how prior resistance can become support. So now that Tesla's breaking down after, 2 years later, right? Price has memory, it's coming back down to these same levels, and now we're retesting this prior breakout level. So do I know that Tesla's just going to bounce today and head back up? No, I don't. But I talk about risk reward, right? If you're going to take a long on any position, you would want it to be around some, something like this, because this is a level that was prior resistance that if buyers are going to step up, if they are going to step up, they're going to step up now. Because if they don't, Tesla can start going down into the 130s, 120s, and that can happen fast. We already saw how quick it came from its highs to the where it is now in a year or so. So Here, I wasn't too worried about taking a starter position with some time here and allowing the play to play out. And I mean, we're already up 2%. It's just how ironic that, Elon would drop that poll this weekend when his stock's sitting at 150. I mean, the chart, the chart's saying it before the Elon dropped the news. So, I always talk about following your charts first, right? Don't worry about the news. The news is going to come. There's going to be a lot of, in and out statements. You're going to be confused because sometimes they're going to come out and sound bullish, and then the next it sounds bearish, and you're just like, I don't know what to do. Well, you can always follow that chart, right? Because at least with this chart, you have something to follow, and you can work at following that every time consistently. And when you have that, that forms your strategy, right? So, I do listen to news. I take that into consideration, right? Um, we're playing certain positions right now based off of some news, but more of it is technically what I'm seeing on charts, things of that nature that's allowing me to say, okay, I'm cool with taking this position and living with the results. So here we are, right? So this is the level you want to watch for on Tesla coming into this week, this 150 level, because if we lose that, it can get ugly for Tesla. But if we don't, we can see a decent bounce. I'm not saying we head back up to 300, 250 or anything like that, but you can see some buyers step up. So of course I'm watching that position. What else? We were in some Babas. Baba's up 3%. If you go into market thoughts, you know my thoughts on why Baba could potentially start heading up soon. This will be on watch this week. Actually, all China stocks for the most part will be on watch this week, but I would definitely be watching Baba here. I mean, the chart's pretty ugly. We're rejecting this 200 MA on the daily. However, we have this 20 MA here to support us. And today I'll be looking to see if we can break out of this to the upside. 90.57 is the level I'll be looking for. And then once that breaks, then we'll be looking to break this 200 MA. If Baba can break 95, keep that level on watch, 95, we can see 100 really quickly. And I do think buying volume will start to kick in. Sorry, I got a lot of tongue twisters going on this morning, but we'll see a lot of volume start to come in, and this will be a top watch for the next couple of weeks, especially with Christmas coming around, right? You might see some pops in, Amazon and Baba and, stocks like that around this time. So just something to watch. But if we do get our position to move this week, I do want to roll out a couple weeks, maybe using a profit to move out into maybe some January contracts, just to give us some more time and allow that move to really happen. One more. So those are two potential long plays I'll be looking at, or we're already in some of those. As you know, we're still short Europe. Not going to be cutting this position for a while, but this is where we took our put position. Well, we were adding all the way up to this position. If I go to the weekly here, come on, Weeble. Ugly weekly candle here, ugly. Same area where we saw sellers come in back in April of 2020. No coincidence that, again, those sellers started to step up. And last time these sellers stepped up, we started to break down. And as you can see, we went pretty much from there back to those October lows of 30. So, we're seeing this starting to happen again. Same type of rejection, right? Ugly weekly candle after this great run to the upside, right? We didn't want to get in the way of that. But, this candle here is a bearish candle. So now we want to start seeing some breakdown. And, this might not happen overnight, but I think over time, this is going to be a really good play, especially where we entered, right? I mean, it can't get any better than that. So we don't have to worry about these bounces stopping us out or anything like that because we got great entry. So now we can just allow the play to work out. You know, this is on a weekly chart. So as you can see, it takes time to break down. But, you know, we got about what 5 months left on that contract. So, you know, I won't be cutting until we probably get at least to this 36.74 level, um, which is just the highs, my fib retracement from the highs to the lows. I'll probably be taking my first trim here on profit, and then I'll probably let the rest go and run and see where we go from there. But I do think if we do bounce this week a little bit in this ETF, that I will look to add to this position. If it doesn't bounce, I won't add. I'll just allow it to do its thing from what I already have. But if it does bounce, I'm going to look to probably look to get another position, maybe a little more out the money, probably maybe a 37p per meg or something like that, but we'll see. What else did I need? Oh, Caterpillar. Another short idea, but we just have to wait to see if it comes to our resistance level. If it doesn't, then I probably won't take a play on it. But if we're looking at the weekly here on Cat, all right, you can see this. And I told you guys about how when we were at October lows, Caterpillar was one of the first stocks that I saw getting bullish flow into the reversal of SPY when we were down at like those 348 levels. Cat was one of the first to get some bullish flow. And I mean, as you can see, they weren't wrong because it bounced hard off this 200 in May. And now, you know, it's pretty much back at high. So now it's flagging up here, but something's going on up here where we're getting a lot of rejection up here at this 240 level, right? Around 240, 239.85 is the high, but we've seen a lot of wicks up here. So there's some sellers present. And this weekly candle here, we want to see how this goes. But if we get back up to this 240 level, this may be a good short into the new year, you know, maybe get a couple months out and, you know, maybe some, I'm thinking like 220s, because if history repeats itself, it keeps rejecting this area. So until it breaks this area, it's looking like a consistent short every time it gets up here, right? So we want to keep a note of that, maybe put a price alert. So when Cat does get up here, you know, you'll be notified, and then you can potentially enter a short with some time and allow that play to work out. Because if we're going to start breaking down in the market, there's a lot of money still hiding in these stocks that can break down. And there's nothing to say that Caterpillar can't break down. I mean, if we go back to 2020, it was a $138 stock, $138 stock. Now it's 240. So, and as you can see last time, right up here, same rejection, right? Consistent rejection up here. Once again, we're in the same level. I mean, same area. So do we see history repeat itself when we reject? You know, that would be some good money on the downside. So this is another position that I'll be looking to potentially get short on if the opportunity presents itself and we do bounce early in this week. I think that'd be a good one too. So that's what I'm mainly looking for. Like I said, I'm going to take it easy today during the first half of the session just to see what we're going to do, because we may just sell off, right? But if we don't and we continue to bounce, then I can start scoping out some contracts, start looking at some premiums, things like that. You know, a lot of the times in trading, 10% of trading is actually taking the trade. You know, the other 10 is, well, one's taking the trade, the other 10 is sitting there in the trade, right? But the other 80% is pretty much patience. You're just sitting there waiting for your opportunity. You know, a lot of times we just want to trade just because the market's moving. But if the market's not giving the greatest opportunities, those are not the times you want to trade. You want to trade when the market can give you that move you want, to give you that profit that you want, right? that's the reason we're putting our money in this market every day is to get the best opportunity. So we have to wait for those. So a lot of times, as new traders come in, they just think about the thought of trading and they just want to take a trade, make money, and that's cool and all. But a lot of times this market is just consolidating a lot. Like even if we see on this weekly chart, even though it's a bigger time frame, so bigger moves are happening within it, it's a lot of consolidation, sideways action, way more sideways action than the big drops and the big moves up. So a lot of waiting. But when those opportunities come, you want to make sure you're ready to have the capital to take the trade, and at least you have the mental capacity to wait to take the trade. Because if you're in some other trade and you're already tired from that trade because you're just waiting, and you're drained, you're not going to have the mental capacity or the energy to want to even take that next trade. And then you miss out on the real opportunity. So, just something to think about. But I'm not going to talk y'all heads off. It is Monday morning, but that is just things I'm looking for this week. I did see some weird flow on some Mexican, I think it was Mexico ETF. Yeah, so it was a Mexico ETF. I'm not too sure about that, but just some odd flow I was seeing pop in. There was some big money on BABA that came through on Friday, some big call options for I think January. So that matches up with what we're thinking as well. So I'll be paying attention to that. And solar stocks have been weak. They continue to be weak. So if those start breaking down, ENPH, FSLR, we already played some Sun Power. I'll be looking at those too, just because they have a lot of downside if they start breaking down. But other than that, we'll see what happens throughout the week. But let's have a good one, and I'll talk to everyone in the trading floor.